All right. Happy Friday, everybody. Welcome to another installment of Fibonacci Fridays. So, today we're going to look at Fibs specifically. Before we get started, I want to let you guys know that I don't use Fibs exclusively by themselves. I use them in combination with other indicators. Okay, if you're interested in learning some of those indicators, FX Street has been kind enough to record some prior webinars with me, and just like this one's being recorded now and will be made available. So if you want to watch webinars on topics including some of the other indicators we use, how to place your stops properly, and also the most common mistakes traders make and how you can avoid them, go ahead and go to this link. And you'll find links to all of those available for you. This webinar will be on that list as well as soon as it's placed online. Today we're going to look at Fibs specifically and how they can be useful. Fibs don't necessarily help you pinpoint an entry. You need some other indicators in order to do that. What Fibs help you do is they help you find your target. They help you predict where the move is most likely to reverse and also where it's most likely to come to an end. Since gold has been moving so spectacularly the past 2 days, I thought it made sense to look at gold and see if we can apply the Fibs to that. Fibs work, just so you know, on any time frame. They're based on ratios and percentages, so they scale accordingly. And they also work on any instrument. That's partially why I picked gold as an example today, rather than just the currency pair. I wanted to show you that, past weeks we've applied it to things like the pound dollar and the euro Japanese yen, but I wanted to show you it works just as well on gold and oil or anything else you'd care to plot them on. Let me describe the sort of situation where you might want to use a Fib first of all. Take a look at the rightmost edge of the chart. You'll notice that price came down, made a new low. Look at where the wicks come to an end down here. Then price started moving up, formed a high right about here. I think that's the tallest of the wicks. Okay, and then started to move back down. Now as we get to the rightmost edge of the chart, you'll notice we've got 2 wicks hanging off here to the downside, and it looks like price is starting to reverse back up. Okay, we had a move up, we had a retracement down. I call that the zigzag pattern. And now it looks like we're pausing on the down move, ready to resume another move up. So the idea is basically I'm feeling like this is bullish. You know, all the fundamental events that we've been hearing in the news lately, they all seem to point towards the dollar dropping further down, towards gold going further up. People love to flock to gold in times of uncertainty. So I'm bullish on this. I know already the direction. I'm feeling I want to move up. The fact that this down move has kind of paused here is kind of confirming my gut feel that this is about to move up. So I'm looking to take a move to the upside. I just have no idea exactly where this counter move might come to an end or where the ultimate target might be somewhere up here. Those are basically the questions I'm looking to answer. And that's when I turn to my Fibs. Okay, so if I know I want to take an up move here, then the best thing for me to study would be the up move that happened most recently, which would be this guy over here. Okay, I know I want to trade to the long side, but in order to be able to set my entry point and my target, I need help from, the most recent up move. So when you want to trade long, study the most recent up move. When you want to trade short, find the closest down move to the left and study that. And to trade Fibs, you only need to be aware of 4 points. I call them A, B, C, D, precisely to let you know that this is pretty easy. Trading Fibs is honestly easier than pronouncing Fibonacci. So if you can say it, I can teach you to use it. I promise. Okay? 4 points, A, B, C, D. If you can keep track of that, I can get you to use Fibs. We're going to start where the prior up move began, which is this wick here, and we're going to call this point A. Okay. Oops. Now I gave it away. But that's our point A, where the down move begins. Point B is, or the up move, sorry. Point B is where the up move came to an end. Okay? So 2 points, we're halfway there. That wasn't so bad, was it? Point A is where the move started that we're studying. Point B is the move where the move came to an end that we're studying. And this is the prior up move. You know, we're over here on the chart. Now, all you do is you select your Fibonacci tool, you click down to drag at point A, and you drag all the way up and let go at point B. Let me show you what it looks like when I do that. Okay? Just like that. First thing you're going to notice is that my fibs look a little bit differently than maybe you've seen before. First of all, in addition to the percentage, I've also got the actual price posted here. I use a couple custom fib levels that maybe you haven't seen before. And also what's really unique about the way I use fibs is that from our 0% fib, which is our point B, you'll notice it counts up in both directions. It counts up this way, you know, 23, 38, 50, 61. This is measuring the extent of the retracement, or in other words, how far the counter move retraced back against the original move. This is a 23% retracement, this is a 38% retracement, and so forth. I realize some of the numbers are covered, but we'll move the chart a little bit over to the left in a moment. You'll see them better. In the meantime, going up, we count up in this direction as well. 118, 127, 138. These are the extensions. Okay? So basically what I did was I tricked MetaTrader into plotting both the retracements and the extensions with one mouse click instead of using two separate tools. And this modification is fairly easy to do. If you have MetaTrader, go ahead and go to that link. That'll tell you step by step how to make this modification. There's a PDF document you can download. And also scroll down and read the rest of the conversation thread. There's some other handy fib tools in there, as well as all of the fib movement rules summarized. Handy link to have. If you don't have MetaTrader, by the way, unfortunately, I can't help you with every trading platform out there because they're all slightly different. You'll need to figure out how to get to the Fibonacci properties in your charting platform on your own. But once you get to the Fibonacci properties, the formulas I list in that discussion thread should still apply. Okay? So we need to identify one more point here, and that would be point C, where this retracement came to an end. Okay? And by the way, one way to validate your fibs once you've drawn them, if you want to see if you drew them correctly, just check some of these in-between levels. You see how this body snapped right on the 23? This wick snapped right on the 23? We had a little bit of congestion here on the in-between level. You know, here all the congestion is happening right at an in-between fib level. If you see the in-between levels being obeyed pretty closely by price, your fib is drawn correctly. If you notice things are really hanging off an empty space, not just one or two, because a fib can't be perfect and catch everything, but if you notice a lot of things hanging off between the levels and empty space, then maybe your fib needs adjusting. That's very easy to do. You just double-click on this red dotted line. This red dotted line is a reminder that MetaTrader plots, so you remember how you drew your fib. Double-click on it, and you get these two little white squares at each end. Okay? And then you can just grab this white square, and you see that? You can drag your You can drag your point B anywhere you like, or you can grab point A, and you can try a few different point A's to see if anything fits better. But that's basically what you do. You just move around point A and point B until the in-between levels start snapping very cleanly. Once they snap pretty cleanly, you know you've got the right fib. So then we just need to identify point C. That's where the counter trend move came to an end and the original trend seems to be starting. Seems to be, if I go by these two wicks, we're right around 61.8. So I'm going to go ahead and put point C there. There it is. So this is our point C. Both of these wicks kind of came to an end right there. Trade bias could be fundamental. It could be prior price action. Lots of things. In this specific example, because dollar's dropping like a rock and oil's going through the roof today, I've had several days like this throughout 2008, and every single time gold shot up. So I know from prior experience, based on the fundamentals, that I'm expecting an up move. It could be based on a news report that came out. It could be based on prior price action or what your indicators are telling you, Dave. Lots of reasons to have a bias. At the point you're drawing the fib, it's assumed that you already have that bias in place. Yeah, NetDania isn't the most sophisticated charting platform out there, I'm afraid. It's fairly limited in what it can do. It's good for basic charting, but it's not going to let you do sophisticated Fibonacci stuff like this. Hey, good news is you can download demos from a bunch of brokers. MetaTrader, the good thing about it is a lot of brokers use it. So once you start using it, you're not married to one broker. You can find a MetaTrader broker, download their free demo, and then just use the charts until the demo expires, then restart. Here's, for example, a link on my website where you can download a free MetaTrader demo if you like. You don't have to have MetaTrader, by the way, to use Fibs, but being able to adjust the fib level somewhat is certainly helpful. There are, by the way, three that you're going to use more often than not. Okay, that's 38.2, 50, and 61.8. So if NetDalia at least has those, you should be okay, because those account for about 2/3 of all Fibonacci trades. Okay, the other ones happen far less often. FX Pro might not be bad. I had my eye on them because they let you trade futures and other things besides currencies on MetaTrader. But I'm a bit worried about them because I sent them some due diligence questions and they didn't even bother to reply. So any broker that does that has me just a hair nervous. You can use them for demo, but if people aren't willing to answer a few simple questions straightforward, I'd think twice about sending them real money. But I've never used them, so I don't know. They could be really good and just really, really busy. But I've been waiting for a reply for about 3 weeks at this point. Just FYI. So we've identified point C. This is not necessarily our entry, just so you know. Our entry might happen sometime after point C, maybe all the way up here. Okay? It depends when our other indicators tell us that it's safe to do so. And once again, the link I posted above, if you scroll up just a little bit, that describes some of the other indicators I use in combination with Fibs. So C, it helps us set D, which is our target, but C is not necessarily our entry point. Our entry point is somewhere after C. I get a lot of emails to this effect. That's why I'm pointing it out. Everybody always asks, how do you know to enter at C? Well, I really don't. I identify C in hindsight once price resumes its move back up. If it wasn't for these long wicks, I wouldn't even suspect that this was C. That's my style of trading. It tends to be more conservative. Okay, I notice C in my rear view mirror, and then I enter sometime after C, but hopefully with still plenty of room to go until D, which is my target. Now, a more aggressive trader, what they might do is they might go long at every single one of these levels in between, okay? They might, because these are the three most common ones, an aggressive trader might go long right away at 38.2. If price continues to move down, they're going to have a tight stop and get stopped out. And then they'll try to enter long again at 50%. If price continues moving down, they'll get stopped out. They'll try entering again at 61.8. An aggressive trader knows they're going to get stopped out more often, so they keep those stops really tight and small. So when they do get the one win, it easily makes up for 5 or 10 losses in a row. That's a more aggressive trader. A more conservative trader doesn't like getting stopped out all the time. So they're willing to give up these extra few pips in exchange for insurance. Basically, the difference is an aggressive trader tries to nail exact tops and bottoms and hates giving up pips, but they don't mind getting stopped out more often in order to accomplish that. A conservative trader doesn't mind sacrificing a few pips at the bottom and the top of the move, but in exchange for that, paying for that insurance, they get to be right more often. Okay, you guys will have to figure out. No. I mean insurance in the form of the move is going to go your way. That kind of insurance. There's no insurance in Forex. If you make a mistake and blow out your account, unfortunately the money's gone. I mean insurance more in terms of safety. Okay. Though there is such a thing as secured and segregated accounts, by the way, two separate things. You might want to ask your broker about that. Segregated accounts means that they keep all their clients' money separate from their own company money. If the company ever gets into trouble or sued for any reason, then the people going after them can go after the company money, but not the client's money. That's the idea behind segregated accounts. Secured accounts takes it one step further in that the clients are considered secured creditors as opposed to unsecured creditors. With most brokers, if they do go bankrupt and you want your money back, then you have to get in line behind their landlord, their phone company, and every other secured lender that's trying to get money from them. Okay, but if your account is secured, you have to be paid back first before the phone company or the landlord or anybody else can sue them. And that's very, very important, especially when it comes to brokers regulated by the NFA. Because lately what the NFA has been doing is when they pull a regulatory action against somebody, they put their own fees ahead of your client money. So in order to pay themselves, they'll actually take your money out of the broker. And that's unfortunately the downside of regulation, but regulation is still a work in progress. You know, hopefully they'll make some improvements to how that's handled. But I know FXLQ, when they went under, the NFA seized all the client accounts, made them re-merge the segregated accounts together into one, and then took all the clients' money to pay themselves first. Awful. That seems to be the way it's going, Rama. That's correct. There's a bill that was passed in May that's expected to take in October. Expected to take effect in October. So maybe the regulation will still be fine-tuned, but in the meantime, ask your broker if accounts are fully segregated from company funds, and ask them if they're secured. It was, Simon. It was. Got a little bit off topic there, but this is important stuff to know, especially if you're new and you're looking for a good, solid broker to open an account with. Certainly good to do your due diligence questions and find out who you're dealing with. All right, back to Fibs. So 61.8 is where our retracement went. We know where our C is. Now let me give you some rules for figuring out where D is. Typically, when you retrace to 161.8, D will fall at 161.8. Okay, that's just a statistical fact. You can look this up in a lot of different places. In my own trading with Fibs over about the past 3.5 to 4 years, I've discovered that this is right about 77% of the time. Not every time, but it's right a lot more than it's not. The other common ones that you will encounter more often than not: 50%, which also goes to 161.8. So 50 down here. And 38, which typically goes to 138. Those are the three most common patterns you'll see out there, and the ones I recommend you start out trading. Okay? If you go to the link I gave earlier, here it is again for you. I do describe some of the other movement rules for some of the other in-between levels. But those three are by far the most common ones and the ones I suggest you start out trading. The formulas are listed at that link as well, actually. So you guys can look those up. So in this case, the retracement to 61.8 tells me the target is likely to be around 161.8. Okay? Or in other words, 940.29. Okay? So that's where I would place my point D. Okay? We know it's going to be somewhere around 940.29. And by the way, don't set your target right at that level. Always subtract a little bit, allow a little bit of padding. How do you know how big to make the padding? Your spread plus the most recent noise you're seeing in the market. How do you know the most recent noise? Take a look at the nearest candle. That's usually a pretty good indication. And just look at the length of the wick. So always go a little bit shy of your targets. And when you place your stops, always go a little bit wider to give your stop a little extra padding. The link I gave you at the start of class, here's that one again. There is a webinar that focuses on stop placement specifically. So I'm not going to cover that today. But if you have questions about where to place your stop, go ahead and watch some of the webinars there over the weekend, and you'll see some great examples for stop placement. So now let's roll this forward and see what actually happened. And again, this is from today's trading. This was exactly the trades I took, well, yesterday and today. So this is a live example. We started shooting up, so my hunch was right to be getting in right around here. Let's keep going. Let's see how this played out. Okay. Okay. Look at that. We encountered a little bit of resistance. But look where we encountered it. You know, first here at the 118 by that wick, we bounced off of that resistance. However, we found support at 0, which was our prior top, and continued moving up. This is a common theme, by the way. You'll see this happen a lot. Okay? Resistance breaks and then becomes support. Okay? Then we continue moving up. We found resistance here, backing off just a little bit, and then take a look at that. Boom. Okay? Actually overshot it by a little bit, but you know what? It's not perfect. Like I said, you give up a few pips at the top and a few pips at the bottom. You go for the 90% of pips in between that are safe. Okay? Hit our target pretty accurately. That's our point D, 940.29. Now let me show you what happened next, because just because you hit your target doesn't mean you have to clear your fibs off and be done with them. A lot of times on the way down, these same levels can continue acting as support and resistance. Okay, let's see what happened next. We overshot this by a little bit. Okay, then we come down. Funny enough, look at that. We found support right at the next fib. You see how well this continues working even after our target hit? This story is not finished yet, because I want to show you something also called bonus rounds. Okay? We came down, we're doing a pullback. By the way, the reason we had a pullback and the reason it stopped here, it's not only the 118% fib, our 21 exponential moving average was in this spot too. I cover that in the link I gave you above. But very often, after you have a big move up or down and you have a retracement, a lot of times that retracement takes you back to the 21 exponential moving average. So besides the fib, I had another warning here that this is where it was going to pull back to. Okay, after the pullback, and by the way, because the 21 acted as support specifically, I took another long here back up to the 161.8. I'm more than happy to repeat a winning trade. If this is going to go on to make a double top, I'm only too happy to repeat a winning trade. The link I gave you above covers specifically how I use the 21 exponential moving average along with a pair of envelopes to exactly accomplish that. Just kind of repeat the same trade over and over as long as it occurs. So basically I take another long at the 21 exponential moving average, back up to the 161.8. Okay, repeated that trade. That's 2 winning trades so far. And now let me explain how the bonus rounds work. Anytime you hit your target on a fib, there are additional levels above it. You know, if you hit it, if your target was at 138 because the retracement had gone to 38, then 161 would be your first bonus round. After 161, there's another bonus round called the 200. And there's another one after that called the 261. So above 161.8, I've actually got 2 extra custom fibs plotted. The rules for if you get to trade a bonus round or not are basically, if this is your target, then you expect it to act as resistance, just like it did here. Price overshot by a little bit, but in the end, price moved back down. Our 161.8% fib acted as resistance. Okay? If that resistance breaks, remember the pattern I showed you back here? If that resistance breaks and then becomes support and price continues moving up further, then you know you're likely going to go to a bonus round. So what I'm looking for now that I'm above the 161.8, I want to see if price will come back down to 161.8, bounce off of that level of support, and continue moving up. If it does, I'll take another long just from the 161.8 fib up to the 200 fib. Okay? And look at that. Look at where this candle opened, where the wick of it opened in relation to this wick. You guys see that? That's exactly what happened. Price came up, overshot the 161.8, came back down to it, tested it as support. Once it found support, we can go long again and just trade from this fib up to the next fib level. That's what I call the bonus round. And take a look at that. This is now present with where the candle is now. We came up above, a little bit above 200 actually. This was the trade that I closed shortly before class at 260.10. And actually, if you don't believe me, look at the last article I posted on FX Street. Because I post articles almost every day here. And about 3 hours before this target was hit, when we were still down here, I gave the indication that likely we're going to go from here up to here. Okay? You can read it for yourself. Look at the time that article was posted. In general, if you want my market updates, go ahead and bookmark this link. That'll always give you the upcoming webinars here on FX Street that you can register for, as well as my latest articles and market forecasts. So in this case, this was a bonus round to 200. Do we get a bonus round to 261? As of right now, I don't see it because we were above 200, but the 200 did not hold as support. You see that? We dropped back below. So in this case, I'm not taking the bonus round from 200 to 261. I'm going to stop trading for now. If and when price does get above 200 and retests 960.10 as support, then I might consider another long going on to the third target. The third target is mentioned in the article. If I zoom in a little closer, by the way, this is a 5-minute chart now. Same thing, gold 5-minute chart, but have a look at this. Look where the congestion was. Over here, we moved down. Look where the congestion was here. Look where these candles broke apart right here. You can see that 200 remains a significant level even after the target was hit. Sometimes you can, JS. Yes, absolutely. Sometimes you can. but not always, okay? You need to check your other indicators and make sure the move is continuing, okay? At some point, trends do reverse, so you have to make sure that you're not getting indications of a trend reversal. Sometimes you can do that. You can make D your new B, for example. You know what I mean? Basically, the cool thing about fibs is you can do them a few different ways and you'll still arrive at the same result. If I make my fib wider, then the spaces between them also get wider. So everything stays relative with a fib. That's part of the reason they work so well across multiple time frames as well. It's only a given that it will hit 200, Abel, if we retest the 161.8 as support. Okay, you have to have this break and this retest pattern. Without that, it's not a given. If you have that break and retest, then it's still not 100% sure. You know, no system's going to be 100% perfect. That's why you need money management and stops for those few times when the system fails you. But it's pretty accurate. It's right more often than it's wrong. But certainly, I would still set my target a little bit shy, whatever your spread is and whatever the most recent noise you've been seeing. You know, maybe switch to a 5-minute chart and check how long the most recent wicks are. That's the noise that the markets are experiencing. I could potentially draw ABCD to project target 2, but as of right now, I don't need to. I have my target 2. Now I'm waiting to see if target 2, if we will manage to stay above that. You know, where we close the day, because keep in mind this is a daily candle. And if we can close the day above 960.10 and find support there, then maybe in the coming days next week we might hit 992.14, maybe. So you could redraw your fibs. You know, you could make this point A, this point B, see where this retracement is. I just don't see a need to. I will usually keep my fibs up as long as I see the in-between levels being snapped to and adhered to. Once I start seeing things overshooting or falling short, then I might redraw my fibs and look for another alternative. Now, if you guys want, stop by my website sometime, fxknight.com. I've got videos you can watch where I take more of these ABCD type trades. I've got a forum with lots of other great articles, things you can use together with fibs to help your trading. I've got a chat room where you can interact with other traders who are proficient with trading fibs. Lots of great stuff, and it's all free. So I encourage you guys to stop by, fxknight.com. If you want the personal training, we have a paid option as well. You get to start and end every trading day with me, looking at my charts, tossing ideas around together. The link is there. All right. Any other questions before we wrap it up? Call it a weekend. FXDD should have gold, actually. They added it a couple months ago. FXDD has gold. Crown has gold, I know. Trying to think. ODL has it. FX Pro has it. A few different people have it. That could be. Maybe you need to download the last version. Latest version, sorry. If you want to learn about some of the other indicators I use, go ahead and check out some of the webinars that FX Street has been kind enough to record for us in the past. I cover them there. And as far as difficulty logging into my site, would that be the chat room or the forum? Because they have separate logins. You can create accounts for free with both, but they're separate. The forum? Okay, maybe check your spam folder, because what the forum does is it sends you an email to confirm that your email address is your real one. And maybe your spam folder ate that up. The chat room is pretty easy to log into. However, the chat room's login window uses a pop-up window. So you have to make sure you allow pop-ups, or at least that you make fxknight.com a trusted website. and then it'll work. All right. I do mention some of my other indicators. You can also join us, by the way, every Wednesday here. That's all we talk about is the other indicators that can be used in support of Fibs. Some of my favorites are the exponential 21 moving average. I like the 50 simple moving average. I like the 200 simple moving average. I like the outer envelope of the exponential, of the 21 exponential moving average. I like an indicator that I use called OSMA. It's very similar to the MACD, but a little more precise. I like the ADX. I like stochastics. There's a bunch of them. It depends on the specific situation that I'm trading. Every situation's a little bit different and requires slightly different indicators to play it out. You can also go to this link. Check out lessons 7 and 8 specifically. And they'll cover that. Pound yen. This is the last question, and then we've got to wrap it up. We're already a little bit over our time for today, but let me take a quick peek. By the way, I don't believe in correlation, just so you know. Every currency pair goes through moments of correlation, and it goes through moments of discorrelation. Okay? So you can't rely just on correlations between currency pairs. You know, as of right now, I'm just seeing some serious ranging action. I would not look to take a position on this until we either break above 211.08 and retest that level as support and keep moving up, or until we break below 210.37 and retest that level as resistance and then continue to move down. As it stands, I would just trade inside of that range for now. All right, you guys, thank you very much for your time and attention. Hopefully I've sparked some interest. Hopefully you'll go on and do a little bit of further study in this. And hopefully one day we'll meet again, either in this chat room or at fxnight.com. Thank you all very much. Wish you a great weekend.